forward. What do you want to see for a market to come off? You test the overnight high or something after the open where you think it could go. A lot of people are like, hey, I think the market's weak and I think you test the overnight low. I was. What are you going to use to qualify after the open for it to test the overnight low? A lot of people will be like, I think you go down to the overnight low, which is around 45, and then rally. So they want to buy and get long if it goes to 45. How about be short on the way to 45 and cover at 45? Then think if you want to get long, get long. A couple things happen. An iceberg chased us up, and generally when an iceberg chases us up, once he gets filled, it's bearish and we'll go down when it's a buy iceberg. Okay. That's number one. Number two, we go down to this iceberg, which we knew was going to be pretty big because he's showing 100. And so once we get these longs to pile in, and you see them pile in, then we go through it, that helps facilitate the lean. If you're long, you're a seller. And if you're a seller, you're looking for someone bidding. And an iceberg buyer is bidding. So those big greens come in right in there. You see them flashed in there. And then we scoot through it. Then we use 50-50 and the iceberg is overhead resistance. And you can see the market rotate back up there a couple times in here. Longs come back in and we step on it again. And then the market jumps out of the hole. I was just about to say at the time, hey, there's some shorts covering in here. Some shorts getting in here. And bam, a 3,000 lot buyer came in. And what I had said is, I don't think we go and retest to where he started. The reason why I don't think we retest where he started was because a lot of shorts on the way down are pissed they didn't cover down here on the retest of the overnight low. And when you got pissed shorts, they generally say, damn it, I'll try to cover now. I'll try to cover now. And they walk it kind of in a way, chase it back up. And then you see new shorts getting in all in here. That's indicative of upside. And of course, the market runs. Then the longs come in, the market just breaks down, breaks back a little bit. And then when it gets, and I'm circling it, when it gets shorter, gives it fuel to go back up, and so on. Let me fast forward it all the way to another instance of a nice iceberg. And he came in right in here. We finally got through him. And then we use 50-50 where there's some longs that are stuck as the overhead resistance. All right. And we get some more longs that come in and the market dips. That's the win moment. Then you take a look at our friend, the NASDAQ here in the upper right. They actually rally into a bunch of longs that are coming out at the same time. We back it up. Right there. Bunch of longs come out on this jump. At the same moment, a bunch of longs came in and jumped in the ES, and that called the move lower in the S&P. In the NASDAQ and the S&P. This long came in at the same time these longs up in here came in. You don't see them here anymore because they went away. So let's just review that again. Here's the iceberg. You get more longs. They're like holy SHIT. It dips through the iceberg, tries to come back above it, stays below this stuck long at 50 spot 50. These longs come in. Remember, longs equal sellers. That's the one moment for downside. Then, when the damn market rallies quick, and there was another like 3,000 lot order that came in, I tell people, we get above what got us bearish, then we're bullish, and a big short comes in right there. Watch it. We pop, bam, this big short comes in. Do you want to be long or short? You want to be long when others are short. You don't want competition. You don't want to be short when there's shorts like that. That's why it popped. And as it went up, more people got short. Understand the 4 golden rules of trading. After someone's long, they are a seller. After someone's short, they are a buyer. What does it take for price to go up? And what does it take for price to go down? Understand those 4 rules. Then you'll understand order flow because you'll understand how to track the intent of the order, which we do with our OPP and puke tool.